Twitter's biggest problem, more than anything else, has been consensus expectations. And it's not so much that consensus is not giving them any breathing room. It's that they are trying to appease the street by exceeding consensus expectations at the risk of long-term damage to their business model. So what do I mean here? I'm going to give you a quick backdrop. So Twitter runs a CPC ad model, cost per click ad model, which basically means that the user must engage with every ad, the user must engage with the ad in order for Twitter to get paid. Now, in order to hit consensus estimates or to exceed consensus estimates, what Twitter needs to do is they really need to press the pedal in terms of ad load, and that's really what has been driving their revenue growth throughout their short public history. The problem with that is that ad load is pushing its users away. So the thing is that the reason why we're saying that this is creating long-term damage to their business model is because they've actually churned through, by our own estimates, 40% of the total number of U.S. active users that have ever created an account. And the way that we're backing into that is we simply ran a survey of roughly 7,500 U.S. internet users, and that's what the data spit out. So ultimately what we are seeing here is that ad load is pushing the user away to the point now where they've actually churned through such a large percentage of their users that they're now in a very precarious spot. So, as it relates to the new CEO or Twitter's go-forward strategy, the thing that has done them into this point has been chasing consensus expectations. And what they need to do now, moving into 2016, is they need to rebase expectations instead of actually trying to appease these sell-side monkeys who are competing to be the biggest bull on the name. Now, that being said, when it comes to 2016 guidance and the new CEO, or any way you want to slice it, it's going to be a very, very telling sign in terms of what the go-forward strategy is for Twitter moving forward, or the new management team moving forward. Because as it stands right now, 2016 advertising estimates are a pretty lofty target in itself. That being said, if management comes out and they guide big for 2016, or they guide in line for 2016, all they're telling us is that they're going to perpetuate their current strategy of appeasing the street at whatever cost it takes, and that includes long-term damage to their business model in the form of cumulative churn. And just to take a step back here, the thing with the cumulative churn, when you churn through roughly 40% of all your U.S. users that have ever created an account, the thing with that is that Twitter is running a CPC model. So that being said, when you churn through all of these users, ultimately that means that your long-term total addressable market in terms of your revenue opportunity is inherently limited by the fact that you have less users to distribute that ad load onto. So ultimately, as it comes to 2016 or the go-forward strategy, what we want to see from this company moving forward is we want to see them grab these sell-side monkeys by the horns and just rebase expectations into 2016 to give them the breathing room necessary to run a business model that actually has long-term viability. So that being said, we don't really care so much who the new CEO is, but what we do care about is how they approach, how they run their business model moving forward, and how they manage expectations moving forward. I think that's the biggest thing facing this stock right now. So as it relates to our positioning here, we're going to stay short from now into the 2016 release unless management rebases expectations before that time, possibly at an investor relations day. If they choose to try to appease the street and guide in line with consensus expectations, we press. If they choose to rebase expectations now to buy themselves some breathing room so they aren't going to create such long-term damage to their business model, we will get out of the way. And there's actually a chance, depending, that we might take the other side of the trade. But everything from this point moving forward really depends on how management approaches the street moving forward.